Bismillahirrahmanirrahim. This is Abdul Basit Suhail from Lahore, Pakistan. Let's understand the differences between Islamic and conventional bank. Islamic banking is bound to follow the teachings of Allah and Muhammad sallallahu alaihi wasallam. You can demand Sharia compliance from Islamic bank. You cannot demand Sharia compliance from conventional banks. Every Islamic bank has Sharia board that is responsible to monitor the bank's activities. Additionally, Sharia compliance department is also made to facilitate the Sharia board. Interest has been replaced with mudarba, etc. Money in current account is received on qard basis. So money received by Islamic bank cannot be invested in non-permissible activities. But conventional banks are independent to invest depositors' money in permissible and non-permissible activities. Money in saving account is received on mudarba basis. Conventional banks do not use any Islamic mode. So money received in saving account cannot be invested in non-permissible activities. There is only creditor and debtor relationship in conventional bank, but a relationship in Islamic bank is different with respect to mode. There is Rabbul Mal and Mudarib relationship in saving account, seller and buyer relationship in sale based transactions, seller and sellee relationship in rental based transactions, Mustajir and Ajir in service based transactions. Islamic banks can invest their money in Islamic stocks only, but conventional banks are not bound. They can also invest in non-permissible stocks. Islamic banks only can offer takaful. Conventional banks can also offer insurance, which is prohibited. Islamic banks cannot finance to those activities that are harmful to the society, for example, alcohol and tobacco, etc. But conventional banks are independent. Money is commodity or a product for conventional banks, but for Islamic banking, money is only medium of exchange. In Islamic banking, compensation is always summon or price. If there is violation of prescribed Islamic guidelines in any transaction, the profit from that particular transaction will be treated as charity instead profit for bank. If bank charges fine to avoid misconduct on customer's part, amount received will be treated as charity in Islamic banks. But conventional banks do not treat fine as charity, they treat as profit. Conventional banks consider credit worthiness of customer, but Islamic banks consider viability of the project. Islamic banks participate in trade, leasing, and partnership. Islamic bank cannot charge for not maintaining minimum balance. So because of these reasons, Muslim jurists, Muslim scholars are also in favor of Islamic banking instead of conventional banking. Yes, Islamic bank can also maximize profit but subject to Sharia compliance, but subject to Sharia restrictions. Islamic banks also share the risk, also share the loss with customers in case of loss. But conventional banks do not share the risk and do not share the loss. There is no gharar, no gambling, no deception in Islamic banks. There should be conformity of contract with the objectives of the Sharia. Subject matter of the contract should be lawful, should be permissible in Islamic banks. Kafala, wakala are used in Islamic banks. So contingent contract is not allowed in Islamic banks. Sale contract of future is not allowed in Islamic banks. Conventional banks are also involved in future selling, etc. House building is financed through diminishing musharaka in Islamic banks. Ijara is used in Islamic banks. Hawala is used. Short selling is not allowed. Sale of debt and receivables are not allowed in Islamic banking. Islamic banking cannot invest in risk arbitrage, in future trading, in forward trading, in swaps, in swap options, in debt swaps, in credit default swaps. Islamic banking cannot invest in speculative insurance underwriting, subprime loans, call option, put options, spreads of options and combination, currency options, rollover loans, muni bonds, Brady bonds, junk bonds. So conventional banking is involved in all these prohibited activities. Excessive leveraging is not allowed for Islamic banking. Conventional bank loans are not allowed. Islamic banking cannot invest in conventional mutual fund, cannot invest in conventional commercial papers, in interest-bearing bank deposits, in conventional bonds, in conventional T-bills, in conventional non-compliant investments. So any penalty charged on late payment in credit sale will be treated as charity instead of the profit of the bank. So Islamic banking cannot receive dividend from non-compliant companies. Finance lease, hire purchase, issuing the preference share is not allowed in Islamic banks. Islamic banks cannot invest in the companies that are declared non-compliant. Insurance claim reimbursement is not allowed in Islamic banking. So there is clearly difference in balance sheet of the Islamic bank and conventional bank. There is murabha, ijara, diminishing musharka products in asset side of the Islamic banks. But conventional banks only have interest-based loans. There is mudarba, musharka, qard in liability side of Islamic banks. Conventional banks have only loans in liability sides. So Islamic banks, that's why promote more financial justice. So may Allah forgive any mistake in content and concept. Thank you for watching this video. So that's why you should invest and deposit your money in Islamic banks.